Welcome back to Financial Freedom Journey. In today's video, we're diving into the exciting world of investing for beginners in 2025. If you've ever thought about growing your wealth but didn't know where to start, you're in the right place. We'll explore various investment strategies tailored for novice investors, from stocks and bonds to real estate and mutual funds. You'll learn about the latest opportunities in the market and how to navigate them with confidence. Starting to invest early in 2025 is crucial, as it allows you to take advantage of compound interest and market growth over time. We'll share tips on how to set realistic goals and develop a solid investment plan that aligns with your financial aspirations. So whether you're looking to save for retirement, a home, or simply to build your financial future, stick around as we guide you through the essential steps to kickstart your investment journey. Understanding the basics of investing. Before diving into the world of investing, it's essential to grasp some fundamental concepts. Let's start with key terms. Stocks represent ownership in a company, allowing you to benefit from its growth. Bonds, on the other hand, are loans you give to companies or governments in exchange for interest payments. Mutual funds pool money from multiple investors to buy a diversified portfolio of stocks and bonds, making them a great option for beginners. Understanding your risk tolerance is crucial. It helps you determine how much risk you're willing to take with your investments. Additionally, setting clear investment goals, whether for retirement, a home, or education, will guide your decisions. Lastly, diversification is vital in building a balanced portfolio. By spreading your investments across various asset classes, you can reduce risk and enhance potential returns. With these basics in mind, you'll be well equipped to start your investment journey confidently. Setting your investment goals. Setting realistic and achievable investment goals is a crucial step for any beginner. Start by identifying your short-term and long-term financial objectives. Short-term goals might include saving for a vacation or building an emergency fund, while long-term goals could focus on retirement savings or purchasing a home. It's important to align your investment strategies with your personal financial situation. Consider factors like your income, expenses, and existing savings when determining how much you can invest. For instance, if you're aiming for retirement, you might choose a mix of stocks and bonds that match your risk tolerance and time horizon. Common investment goals include saving for a child's education, building a nest egg for retirement, or accumulating a down payment for a house. By clearly defining these goals, you'll create a roadmap that guides your investment decisions and helps you stay focused on achieving your financial dreams. Choosing the right investment account. When starting your investment journey, choosing the right investment account is essential. There are several types available for beginners, each with its own features. Brokerage accounts are flexible and allow you to buy and sell a wide range of investments, but they may not offer tax advantages. Retirement accounts like IRAs and 401ks provide tax benefits and are designed for long-term savings, but they come with restrictions on withdrawals. Robo-advisors are automated platforms that create and manage a diversified portfolio for you, making them ideal for those who prefer a hands-off approach. However, they may charge management fees that can eat into your returns. As you consider these options, think about your investment style. Are you hands-on and want to manage your own portfolio, or do you prefer a more automated approach? Understanding your preferences will help you select the account that best aligns with your financial goals. Exploring investment options. As a beginner in 2025, it's important to explore various investment options that can help you grow your wealth. Popular investment vehicles include exchange-traded funds, or ETFs, index funds, and individual stocks. ETFs and index funds are great for beginners because they offer diversification by pooling money to invest in a broad range of assets, reducing risk. Individual stocks can provide higher returns but come with increased volatility and risk. Understanding the difference between passive and active investing is also crucial. Passive investing involves buying and holding investments for the long term, often through index funds or ETFs, while active investing requires more frequent buying and selling to capitalize on market fluctuations. For beginners, passive investing is typically recommended due to its simplicity and lower costs. Before diving in, take the time to research and consider your options. Understanding the pros and cons of each investment type will empower you to make informed decisions that align with your financial goals. The importance of research and education. In the world of investing, continuous learning is essential for success. As a beginner, it's crucial to enhance your knowledge by utilizing online resources, books, and courses that cover various investment topics. These tools can provide valuable insights and help you build a solid foundation in investing principles. Staying updated on financial news and market analysis is equally important. Understanding market trends and economic indicators can inform your investment decisions and help you anticipate changes in the market. Moreover, learning from both successes and failures is a vital part of the investing journey. Each investment experience offers lessons that can refine your strategy and improve your decision-making skills. Embrace the process of learning, and don't shy away from analyzing what went right or wrong in your investments. By committing to ongoing education and research, you'll be better equipped to navigate the complexities of the investment landscape and achieve your financial goals. Building and managing your portfolio. Creating and managing a diversified investment portfolio is key to achieving your financial goals. One of the foundational concepts in portfolio management is asset allocation, which involves distributing your investments across different asset classes such as stocks, bonds, and cash. This strategy is crucial for risk management as it helps mitigate potential losses by spreading risk across various investments. Periodic portfolio reviews and rebalancing are essential practices to ensure your asset allocation remains aligned with your investment goals. Market fluctuations can cause your portfolio to drift from its intended allocation, so regularly assessing and adjusting your investments is vital for maintaining balance. Lastly, staying disciplined and avoiding emotional investing is crucial for long-term success. Emotional reactions to market volatility can lead to impulsive decisions that may harm your portfolio. By sticking to your investment strategy and focusing on your long-term objectives, you'll be better positioned to navigate the ups and downs of the market effectively. Conclusion. In today's video, we explored essential topics for beginners looking to invest in 2025. We discussed the importance of understanding fundamental investment concepts, setting realistic goals, and choosing the right investment accounts. We also highlighted various investment options, the significance of continuous research and education, and the strategies for building and managing a diversified portfolio. Starting to invest early can significantly impact your financial future, so don't hesitate to take that first step. If you found this information helpful, please take a moment to subscribe, like, and share this video with others who may benefit from it. We invite you to explore related content on our channel or website for further learning. There's a wealth of knowledge waiting for you, and we're here to support you on your investment journey. Thank you for watching, and we look forward to seeing you in our next video.